Great. Thank you all for coming to FTI this evening. I'm Charlie Palmer. I'm hosting this evening and saying very little you'll be glad to hear. It's fantastic to see such a full room. You've got a fantastic panel, a fantastic moderator, and I think, boy, it's been great talking to some of you just now. I think getting the range of views you can get from this sort of panel where you've got all the different areas of finance, it's a really big topic. I think that's really, really important. And if I give you one piece of advice, just make sure you ask lots of questions, because I think that's what this is about. And I think Caroline and all the Radley Society, thank you so much for organising this. These are great events, so thank you very much. And with that, I will hand over to Phil.
Thank you, Charles. Thank you very much indeed for hosting this evening. It's really appreciated, especially when there's such a big crowd. Ladies and gentlemen, on behalf of the Radley Society, I would like to welcome you to Navigating Careers in Investment. My name is Philip Guest, you've probably worked that out. I'm going to moderate the first half of this evening, which is going to be a panel discussion and Q&A, hopefully involving you guys on different areas of the investment space and how each of us entered the industry and have navigated our careers. This will be followed by the networking part of the evening, for which I'll hand over to Caroline Monaghan, who hopefully you all know. So to business. How do you prepare for, enter and navigate a career in investment? To help us answer these questions and fuel the discussion in the networking session, we have a very good panel this evening. I'm delighted to welcome all of them. You'll quickly realise in listening to what they have to say and in the answers to your questions that there are, in fact, many different roles and many different paths that you can follow into a career in investing, and we hope we'll be able to give you a flavour of some of them. So, joining us tonight, and when you came in, you would have noticed that there was a helpful list on the screen behind us, but unfortunately, because of the way technology works, it's not possible to film the screen, so we've had to take the list down, but they are in alphabetical order, and you can remember this. So, Alex Bowden, who's managing partner at Evelyn Partners, he's going to be representing the world of asset management. Max Bullen-Smith, who is investment director, head of M&A at Ardonagh Specialty, he's going to represent investment banking and M&A. Tom Holbrook is portfolio manager at Cazenove Charities, and he's going to be talking about socially responsible investing. And finally, immediately to my right, Vaksman, who is the founder and managing partner of Launchbay Capital VC. He'll be talking about VC and private equity. So welcome to you all, gentlemen, and thank you very much indeed for joining us. I'll start by introducing myself a little bit more. So, Philip Guest. For a long time, I was a portfolio manager at UBS Global Asset Management. I invested in large cap European equities, during which time I was voted Extel European Fund Manager of the Year for my sins. My route into investment management was unusual, but often they are. I trained and qualified as a chartered accountant. I then went to work at Walt Disney, where I started by working as a character in a theme park. I kid you not. You can place your bets on which one later. You won't get it. Before moving into corporate strategy at Disney. And then I worked at places like Sky Television, Vodafone and Virgin Media before, during and after the dot-com bubble. So how did I get into investment management? Well, I was probably in my 30s by the time I got into investment management. UBS Global Asset Management hired me because I was an industry expert in telecoms and media and technology. But I added consumer and mobility to my expertise whilst I was there. So that's what I did. I'm not in investment management anymore, but what I'm doing is still related to investment management, and I have clients in investment management. I did a master's at Oxford in 2017, where I still teach occasionally. And I'm now a strategy consultant and a futurist. What does that mean? Well, I use foresight to help investors and investee companies understand and prepare for the world of tomorrow, which will inevitably be very different from the world of today. And if any of you want to ask me about that afterwards, you're very welcome to in networking. As Seneca said, luck is what happens when preparation meets opportunity. Hopefully this evening will help you prepare for and navigate the opportunities of a career in investment. So now over to our distinguished panel, who will introduce themselves one by one before we move on to Q&A. So Alex Bowman, would you like to introduce yourself, tell us a little bit about what you do and how you got there?
Thanks, Philip. Hopefully the mic's working. I've managed to pluck it out of the stand. Good evening, everybody. I'm an investment manager. I am a portfolio manager and a relationship manager all rolled into one, and that is because I work in the private wealth industry, and I have done for the last 28 plus years. So I left Radley and I went to Bristol University, where I read German. Not a natural starting point, you might think, for a career in financial services, and it wasn't necessarily. And I left university not really knowing what I wanted to do, but I had researched investment banking at that point and thought it sounded quite interesting. Got a number of interviews, and through the interview process realised that it wasn't exactly what I was looking for. It wasn't going to suit me as a person. So I ended up looking at investment management, and I got some work experience, and effectively I've never left because I converted the work experience into a full-time job, and that was at a firm called Fleming's that doesn't exist anymore. I was there for 5 years. Fleming's was then taken over by JP Morgan, the big American bank, and from there I moved to the firm I'm in now. So from 2001 I've had exactly the same job. I've managed to get promoted once or twice, and that is me. We can talk about what private wealth management really is in a moment.
Thanks, Alex. The privilege of being moderator is I get to ask a question of all of the panellists. Alex, you had quite a traditional start in that you always knew that this was what you wanted to do from when you started doing your work experience. Do you have any words of advice for people who are feel that they are already committed to a career in investment management about how they might start with momentum?
Yes, let me think about that, Philip. I think that the investment management business, particularly private wealth, but also institutional investment management, which is the fund management business, is about longevity. Actually, it's about building up a long-term track record. You're either doing that through pure investment performance, if you're a fund manager, or you're doing it by building relationships with families and individuals, and which is the area I'm in. But it's the same thing. It's actually running the course, and it's a long career path. It's a very rewarding career path, but it's one that you have to be quite patient with.
Patience. Thank you, Alex. Max Bullen-Smith, representing investment banking and M&A. So Max is investment director at Ardonagh Specialty. Max, how did you get into the world of investment?
Hi everyone, thanks very much for having me firstly. So I left Radley in 2009 and started my career out in strategy consulting actually for Accenture. Did that for about 12 months and then wanted to pivot specifically into investment banking. I moved to an investment bank called FinCap, now Cavendish, where I spent 5 years doing public company M&A. I primarily helped US private equity firms buy UK listed businesses on the London Stock Exchange across all sectors, all different industry types, all different sizes, some voluntary, some involuntary, which was really interesting. That was fantastic for getting a sort of technical skill set, exposure to the kind of work that you're going to have to do and how it can kind of pivot into lots of different spaces within the investment banking space, either sector specialism or the kind of advice that you're going to be giving either on the legal side, on the technical side, depending on what client you have. I then, after 5 years, ended up selling a business to the firm that I am at now. It was an insurance broking business to Ardonagh, who are a private equity and sovereign wealth-backed holding company that primarily invests in financial services firms, whether it's fintech, MGAs, insurance brokerages, insurers, sort of supplementary services that support that industry. And I've been there for 5 years. I started out, as I said, as an investment director there, sort of helping mitigate manage the criteria of what we're looking to invest in, doing all the sort of technical work and sort of the advisory work, both with fund providers, targets themselves, and that sort of broadened itself out into a head of M&A role, which is what I do now. So I sit within our own department that specifically looks at the strategy behind buying the assets that we want to acquire within our niche, portfolio management to the extent that we sit on top of about 600 different businesses across 4 different pillars. We manage how those slot together, both through further acquisition, through divestment, through fundraising within that process, all of which I learned how to do in investment banking in my 5 years, and have applied it in the subsequent 5 years at Ardonagh, where I continue to this day for my sins to practice that strategy. Again, it's primarily an investment banking skill set, just carved out a bit of a niche, particularly within insurance.
Max, that's great. I'm guessing based on what we said earlier that you obviously have and do occasionally recruit experienced people from within industry. But what advice would you give the guys here who are still at school or at university about how they might improve their chances of getting into a career in investing?
Yeah, I think that's a particularly apt question. There's a lot of competition for these kind of industries, as I'm sure the panel will sort of agree. There's a lot of willingness to get into this industry from not a huge amount of places across the board. I would highly recommend thinking about what you want to get into broadly within investment. As you can see from the panel here, there are so many different sector specialisms, and if you try your hand in all of them, it will be very, very difficult, because when you come to an interview, when you come to actually making those applications yourself, it's a bit of a scattergun approach. I really think about whether it is something you want to go into fund management, you want to go into M&A, you want to go into sustainable investing, venture capital, private equity, and use your time at school and university to sound that out. Radley, as I'm sure you can see today, and certainly in my experience when I pivoted from strategy consulting into investment banking, was one of the most helpful network outreaches that I had. I reached out to everybody within the LinkedIn network that had a relevant path to what I wanted to do. There were so many people that were willing to give up their time to sort of explain to me how those different pillars within investment or investment banking worked, the sub-pillars within that, because again, if you've got a particular interest in fintech, whether you've got an interest in financial services, tech, whether you want to be a generalist, consumer goods, find somebody who does that, reach out to them, get to know it, and fundamentally try and get the experience. Do work experience in any guise that you can, because you have something tangible to sit back to, talk to, give your experience in as well. Radley's, again, was a fantastic opportunity for that. Grad schemes, summer programs, use your time at university specifically to get those things under your belt. They've got a little bit less competition. As Alex has already pointed out, your ability to convert those summer internships into grad schemes and beyond is a lot easier to convert than actually just applying. The other thing that I would say briefly on that is, it is also a numbers game. You are going to be extremely qualified for the things that you end up doing, and the perfect candidate might not end up finding that role. Apply to as many things as you can. It is a bit of a soul-destroying process, but it is one worth pursuing, and it is, as we've already talked about, it is also a bit of luck, and I cannot stress that enough. It is about being patient, it is about being persistent, but fundamentally use both experience and your network to get there, because you will.
That's fabulous. I mean, I would reinforce that, and I suspect the other panellists would. It is a numbers game. All of these things are. Whatever career you decide to pursue, it's a numbers game. If you do twice as many applications, you get twice as many interviews. It's that straightforward. I would also reinforce what Max said about talking to your network and ask people questions. One of the things that makes the difference between a good investor and a bad investor is good investors know what they don't know, and they make the effort to find out how to fill those gaps. And so if you want a career in investing, you come and ask any of us. Don't be afraid to ask us something. It may feel like a simple question to you, but believe you me, we didn't know the answer to that question at some point in time, and we had to ask somebody, and we found it out. So don't be shy. Tom, socially responsible investing portfolio manager at Cazenove.
Hi all. I've written down everything I want to say because I don't want to ramble. So you can tell something about experience here by who needs prompts and who doesn't. Tom Holbrook, former D-Social boy. I left Radley in 2009 for Exeter University, where I studied civil engineering. From there, I got a job at Investec in a role that would allow me to complete my financial exams, which are a prerequisite for anyone providing financial advice to retail clients in the city. So tip there, know what you're signing up for in terms of future examinations. I now work at Cazenove Capital, part of Schroders Group. Cazenove is the largest investment manager to the top 5,000 charities in the UK, responsible for looking after 12 billion on behalf of the not-for-profit sector. Their sustainable multi-asset fund for charities has been the fastest growing charity fund in the market since it was launched in 2019. My role is to manage portfolios, but also to advise charity clients on their investment affairs. For the best part of 10 years, I've been working in this rapidly changing area we now refer to broadly as sustainable investment. Indeed, I ended up going back to education and completing a postgraduate certificate in sustainable business at the University of Cambridge. So there's another tip there if you want to read into it, that you should be continuing the process of learning all the way through the early portion of your career. Charities have been invested for a long time, and principally they do so with a view to generating a financial return, but many are interested also in seeing their investments generate a positive environmental and societal impact also. This is the idea at the heart of sustainable investment. So I'm going to stop there and take your question.
Okay, well, my question is going to lead straight on from there, because you said the magic word sustainable investment. I still struggle to get my head around what all the different facets of sustainable investing are, and I think it's an expression that's sometimes bandied around by people who don't necessarily understand it. Would you mind just expanding a little bit on what sustainable investment means in today's world?
Okay, we break this down into the ABCs, which I think is quite helpful in simplifying a fairly complex area. The A stands for avoid harm. This type of investment approach has been around since the 16th century, since the Quakers precluded their followers from investing in certain areas. It's the idea of ethical investment, but avoid harm is the sort of base of the pyramid, if you like. That's the starting place for where sustainable investment stems from. B stands for benefit stakeholders, and that is what traditionally we've referred to as sustainable investment more broadly. It's investing in companies which are best in class, which have approaches to managing all of their stakeholder relationships and are leading in terms of their environmental risk mitigation, for instance. And C stands for contributing to solutions. This is really sort of the frontier, if you like. It's where you're investing in companies which are making a material difference to the Sustainable Development Goals. It is investing in impact funds. It's investing in private equity and renewable infrastructure. And it is sort of the more extreme, closely aligned investments, if you like, that are having more of a real-world impact which you can quantify.
That's brilliant, Tom. Thank you. For those of you who are not aware of the Sustainable Development Goals, I suggest you can have a look at the United Nations website. They are 17, if I remember. 17 goals set out by the United Nations about how development can be done in a sustainable rather than a destructive way. They're very interesting. There are a lot of them. Some of them are a bit how should we describe it? Bit left field, but go and have a look. Go and have a look at the United Nations website. It's very interesting stuff, and it'll give you an idea of the sort of topics that people like Tom care about. Alan Vaksman. Alan's parents, like myself, of somebody at Radley, and separately, I hasten to add. He's in venture capital and private equity. He's founder and managing partner of Launchbay Capital VC. Alan, could you tell us a little bit about what you do and how you ended up in venture capital?
Yeah, I'm going to sound extremely unstructured after you, Tom, a speech, but I guess it's a little bit of an industry where I work in. I think my journey was always about exploring what's interesting, what's changing, and then where's the biggest need. And I started really thinking about any career by watching, some people are old enough, there was a good movie called Few Good Men, where there was a big legal battle, and the guy was brilliant. Tom Cruise was really phenomenal there. So I decided I'm going to be a litigation lawyer. Went to law school, finished the undergrad, postgrad law school, decided to finally join the law firm, and realized that I'll be photocopying for the next 3 years. So I decided that's not going to work for me. Sent my resume everywhere. I completely agree. I needed to send it to honestness. Ended up in a bank in South Africa called Rand Merchant Bank, which is bank competitor to Investec, which is in essence an investment bank. And that bank really wanted somebody with a legal background because it was flying around at the time trying to buy different banks. That's in Africa. It was needed to expand in South Africa. So that's how I ended up in M&A and the risk side of it, because I had a legal background and I was part of the M&A team flying around. It was all good and well, but as you know, things happened. And South Africa went through a huge change with apartheid and everything. And we decided we needed to go somewhere else and explore the world and really explore financial industry. And what is the capital still, I believe, of the financial industry? London. So I ended up in London. What did I want to do? See as many banks as possible, as many business models and everything. So I joined a consulting. And as it happened, as I joined, became a partner at PwC. I was one of the youngest I think ever made, about 31. Just really, but in my mind, I was still exploring. I was learning about the industry as I could advise, but my main thing for joining the consulting was learning about many, many business models. But one thing frustrated me in consulting, and that's why I was doing this. It was that consulting came, you advised, and you said the right things, but you never saw the things finish. Nothing ever ended with your product. You need to walk away, nothing really done. So no, that's not really great. So I joined banking. Different banks, globally, doing M&A, risk, derivative, new business setups. And but as you remember, 2008 came. The big crisis. And what was the big problem? The entire banking system changed. Everybody was about risk. Nothing was really on the trading side. I even remember me writing an article called Death of a Free Trader. I wasn't really popular with the traders. I think I had to leave that bank after that article. But that's how I ended up a little bit on the risk side and really understanding the entire risk side of finance, which I spent another 7-8 years. But after 8 years, and as banking became more and more regulated, I decided this is quite boring. The change is coming. Banking is going to be disrupted. I need to do something now. I'm 20-something years in this financial/banking. So after my executive MBA, we partnered with another guy there who was quite technical and really was into blockchain, which is in 2017-18. We had some, but blockchain, not the Bitcoin type. So we ended up building 2 fintechs, one in supply chain, one in stable coins, and selling them. And I realized that during this really process, what was my job? He was building most of the stuff. I was building the business. I was investing, I was speaking to the clients, I was growing it, all this. So, and then I realized that the best thing that I'm good at there is investing into those businesses, creating liquidity, and we will talk about what I actually do right now on the VC side, and that's how VC finance started. So while it seems to be completely illogical how from law school you ended up running venture capital, it's always following change, and I think for me it's also always where's the next big thing? What is going to happen? How do you keep within the trend as opposed to stay continuously behind? So that's my driver.
Alan, that's fabulous. I confess I've probably spent a good 30 years trying to work out how to get into private equity and or venture capital myself and haven't worked it out yet. Would you mind offering some advice to these guys? I think some of them may be particularly interested in venture capital and private equity. What would your top tip be for getting a toehold in that industry?
I would have to separate the two. So if we're going to talk about our big growth fund and secondaries, it's completely one way, it's purely financial. And when you're talking about early stage VC, it's very different how you can get into it. Early stage VC, you can get into, from one of the top VCs now, the person was a podcaster. The other one was a YouTuber. completely entrepreneurial you can get into the early stage VC, because as much as people say this is part of finance, and it is, it's actually much more part of entrepreneurship of going out there, really promoting the thesis of how you get access to companies, how do you speak to founders. So the path to early stage VC can be purely entrepreneurial, either starting a business, small business, speaking to other founders, speaking to early stage VC, or even starting a podcast now. When you're talking about private equity or growth funds, which is most of our business right now, it's a little bit, how would I say, more mundane. You need to finish university, go to finance, go to either consulting or usually investment bank, work a couple of years, and after that, you would join a private equity firm as an analyst on this. There are some private equity firms and some larger VCs which you can join directly, but it is very small community, and it is really, although it's talked a lot about, I would be open here, you need to know somebody, because there's very few places if you're trying to go straight out of university to PE or VC.
Brilliant. Thank you very much indeed, Alan. So I'm now going to open the floor for questions. We're going to have about 25 minutes of this. So if any of you have any questions for the panel, that would be great. Please raise your hand. I'm not sure whether we've got a boom. You've got a directional mic that you're going to use for the question. So if you could raise your hand, introduce yourself by name, say what your relationship is to Radley and what you're doing at the moment, and then please ask your question. For the benefit of the room, I'll probably just repeat the question. So over to you guys. Who's going to be first? Thank you, sir.
Hi, my name's Will. There you go. Hi, my name's Will. I left Radley in 2016, and I'm a project manager in the financial services industry. Alan very briefly touched on there at the end about knowing someone in the industry. What is the panel's opinion on nepotism in the workplace, and whether it still has a spot or whether it's died?
There you go. So what is the panel's opinion on nepotism in the workplace? Does it still exist, or has it died? I'll give you my answer. I've never, in my career in the financial services industry, I never saw it. It was people were always hired on talent, not on who they know. I mean, sometimes it's useful to know people so that they can guide you to which doors to knock on, and you should definitely ask people for that guidance, but I don't know, I never saw it. But then these guys might have a different experience.
Yeah,
Tom.
I want to go next before all the good answers go. I think your point on nepotism is that it's useful to have a network so that people can tell you there's a job that's about to be advertised with the following company. Super helpful. They know that you're interested and they can sort of filter you in the right direction. But beyond that, I don't think it gets you very much anymore. I think those doors have mostly closed, unless you're looking for a job at a tiny firm, and actually the personal connection means more than everything else.
Yeah, I think there's no substitute for experience. I absolutely echo what Tom said in the sense that your network will be instrumental in sort of guiding you to opportunities that otherwise wouldn't necessarily be more marketable out there. But it's really the most that I think that you can see of nepotism, particularly today, is having a chance to have that door slightly opened. And going back to what we said before about, sort of it's luck and opportunity coinciding. If you walk into that room from an introduction that's been made and you haven't demonstrated the right sort of experience, or whether it's work experience or if you're particularly young in your career, a demonstrated interest and understanding of the industry, it's just not going to get you through. People want a hell of a lot more than just a recommendation now. So I think whilst doors can be opened by introductions that get made through various different means, it's just the chance to get an otherwise harder to obtain opportunity, but there's no substitute for the experience that you need to bring once that opportunity is presented to you.
Alex, I was going to say, can I ask you, you work in an environment where you have close relationships with families. How do you see this?
Well, I'll answer that by just adding to obviously I agree with what's been said, and I think nepotism isn't a peculiar feature of financial services. I don't think it doesn't stand out in this industry. The only thing I would add is that in the very early stages, which applies to most people in this room, where you're building work experience as opposed to a career, you're building work experience either in last stages of school or through university. That's where you use your network, and I don't think any employer, and I've done graduate interviews for the last 15 years. I don't think any employer would be surprised to see some form of nepotism appearing in opening doors at the work experience stage. But yeah, beyond that, it doesn't really exist.
Thank you. By the way, don't be surprised if not all the panellists answer all the questions. We're going to try and get more questions than answers. Alan, unless you want to add anything particularly on this one.
Yeah, on VC, no. I think it's nepotism as nepotism, kind of in a strict definition of the word. I actually don't see it, even in the smaller firms. You need to be capable, you need to invest. What you do get, although, is the common backgrounds and understanding, especially in the smaller firms when people understand each other from a quarter of the word and they don't need to, and they can work fast. That common culture, that common understanding does help. So because I worked for the largest banks and then around a boutique firm, that's I think you will see. What I also completely agree with all the panelists, you need to work hard to open those doors. You need to network, you need to be persistent, you need to say why you think you're suitable for this firm, because the competition is high.
Will, thank you for your question. Does that answer it for you? Thank you very much indeed. Next, I'm casting my eye around the room. Gentleman over here in the blue shirt, and then we'll go to the gentleman in, I think, the pink shirt further back.
Hello, thank you very much for your time tonight. I'm Cesar. I finished Radley in 2017, and now I'm a data scientist in commercial retail. Mike, there's quite a lot of emphasis tonight on the path that you take straight out of school or during university with summer internships and graduate schemes and things like that. What advice would you have for those who didn't take those at that time, went away to do something else, and later in life realised that they'd like to get into any of your respective fields? Thank you.
Thank you. So the question from Cesar, to repeat, for the benefit of those at the back who may not have heard it, is what advice would the panel have for people who are looking to move into investment as a career from perhaps another commercial role that they're fulfilling at the moment that isn't necessarily directly related to investment? Alan.
I'll take one, because we have quite a lot of people moving from any other industries into investing, both in VC and in private equity. Because what do? We need to understand very deeply the companies that we work with. Therefore, if you're an engineer and we're investing into some of the engineering companies, that's extremely useful. If you're half of your VC investors are ex-founders and tech people coming from IT. So that is very now topical to have somebody called an operational partner, for example, in most of the firms in PE and VC. And these people are not investors, they're not financial, they're just professionals in their own field, helping the investment partners to manage the portfolios.
Yeah, I concur with that. I mean, my own particular path was I'd worked in media and telecoms for 15 years, and I was an expert in those areas. I didn't really know an awful lot about investing. I was hired by UBS because I understood the sector that I was going to be investing in. Their view was that they could teach me how to be an investor. They didn't want to hire somebody who's an investor and then try and teach me a sector. They wanted to do it the other way around, which I think makes a lot of sense. So don't be shy about making that transition.
I think also just a more general comment is that you can, it's about building a plausible story. So when you consider the career change, you move to an interview process to underpin that career change, and provided you can build a story that sells your position and your desire to change, and there are good reasons for it, then I think there's every chance to why doors should open.
In relation to your circumstances specifically, I would also say that there is sometimes a sort of halfway house. If you decide that asset management is your area, you can look to get a data scientist job at an asset manager. Schroders, for instance, has sort of 50 data scientists who sit as a team, and they help portfolio management teams get specific data that is going to help test a hypothesis in relation to investments within their funds. So if you can make a sort of hybrid jump, get into the right sector using your existing experience, then you're nearly there in terms of pivoting into exactly what you wanted to do longer term.
Cesar, hopefully that answers your question. Happy?
Thank you very much.
Great. Gentleman towards the back in the pink shirt.
Yeah, I'm Dom. I left Radley in 2019. I'm now working in the equities team at Stifel. My question is actually following on from that. And maybe focusing more on there's a lot of experience of shifts within the financial services, and I'm wondering sort of how do you prepare an interview going into a different subsector of the financial services, and I'm sure you would have experience being on the other side of that interview room. How do you see people? What do you look for when people are trying to shift?
Okay, so for those at the back again, the question is, if you're seeking to transfer from one sector within investment to a different sector within investment, how should you prepare for your interview and perhaps present yourself?
I think there are two really critical things here. The first, and they're both fairly obvious, but it's amazing how many people don't get it quite right. The first thing is to show genuine passion for the specific area, the specific job you're going for, and that includes actually having knowledge of the firm that you're interviewing for, and the specific industry that they are involved with. So that involves research, it involves talking to your network and making sure that you're really well prepared for it. The other is to be an engaging person, because most interviewers, and at the end of the day, the interviewer is a human being, and most interviewers are really assessing the interviewee as to whether they'd like to work with that person. And I think if you nail those two things, you're home and dry.
Yeah, I completely agree with that. I think it's about, in your particular instance, it's really helpful that it's a team transfer, in the sense that you've probably got a lot of the skill set that someone would be looking for to do that job. So you want to leverage the competency that you've got in that area, in that specialism, on a technical basis. And then I completely agree. It's then very much about showing your passion, why you want. It's about the equity story that you also mentioned previously. Why are you wanting to switch sector? Demonstrating an interest in that sector. Obviously understand on the equities team, look at the recent deals, big trades that have been done, have a commentary on it, have a thought analysis piece, because again, it shows that you're engaged, it shows why you want to move into it, because that's fundamentally believable. I think having done interviews of people who've done a similar sort of platform shift, it is really obvious when someone is kind of going through the motions with it. It's also really obvious when someone generally has a passion for it, particularly if you've gone outside of your specialism to get that level of understanding and that level of commitment. It shows the kind of person that you're going to be working with. So yeah, just echoing on from that.
Alan, I'm going to ask you. You must have a lot of people who come from different areas of investing who want to work in VC and PE. What are the things that you look for in screening candidates at the most basic level?
One is exactly what was mentioned, is why do you want to change and how much research you've done on what you're going to be doing. So, and the second, I think we get quite practical, because we do have a lot of people coming from different parts, not only finance actually, is what problem are you going to solve for us? Why do you want to do early stage investing or liquidity secondary investing? What is your current skill set? How is it going to help us to really meet our requirements? So that's probably is kind of the key. The other one is we really look is how many times did this person change before? And it's a tricky one. If you change too many times, it's not great. But if you've been 25 years in the same job, for us as investors in the new sectors, is also difficult, because it's just very difficult for people to change. So this one is, if we see just very practically a CV every year and a half, got there, jumped, never kept a job, negative. Could be in the first couple of years, but generally is a negative. If you've been 27 years at the same and suddenly decided to become investor in biotech, also there is a question why and how you're actually going to do it.
Brilliant. Thanks, Alan. Did that help? Great stuff. Next question. Oh, okay, so there's a gentleman right at the very back in a white shirt and a red tie, and then we'll come down to the gentleman here in the white shirt and the pink tie.
So my question probably goes to Tom, but open to anyone, of course. During COVID, it seemed like half of everyone I saw on LinkedIn was suddenly starting to work in sustainable investing or ethical investing. It kind of blew up. And then over the last few years, we've seen a lot of challenge to what counts as, sustainable investing, what is ethical. Are, defence stocks, are they ethical because there's a lot of need for them? Oil is bad, but we also need that. Has that sector of investing been slightly undermined recently, or is it sort of being able to grow through that period?
You're right that there's been a whole load of change. All the terminology has changed. The way that people talk about it has changed. We had this horrible expression, ESG investment, which, we've got the United Nations Principles for Responsible Investment, and they talk about ESG investment. That was launched in 2006. It's been a huge success in terms of the change that's brought about in the world. But I think we've got to the point where we can almost retire it as an expression, because ESG investment to portfolio managers, to people in finance, meant looking at companies, considering the externalities, their impacts on society, on the environment, whatnot, and considering those factors as potential risks, integrating that into their assessment of a company. It was all about risk management. But to the clients of the asset management firms, they looked at ESG investment and thought, sustainable investment. So the terminology was difficult. It was all wrong. There was a lack of understanding. And I don't think we're there yet. I think in any rapidly changing subsector, you're going to see change and then a period of reset where you've got to drop all the stuff that didn't really work out and then continue afresh. So yeah, there has been an awful lot of change. We've seen there was the whole US backlash thing against companies which were doing sort of woke investment. But I genuinely think that we have to take stock and move on from here. And this trend has legs. The other thing I would say is that there's more regulation. We had SFDR in Europe come out a few years ago. We're dealing with the UK regulation, the SDR, Sustainable Directive Regime, and that will allow investment managers to apply for labels, and they'll have to go through all this sort of due diligence with the UK financial regulator to put a certain label on their fund. So there's been a whole load of regulation which will ultimately be a good thing in my view, including a whole load of anti-greenwashing legislation, and that will start putting guardrails around what these terms actually mean, and looking under the bonnet to ensure that if a firm says they are doing something or investing in a certain way, they really are doing that.
Was that helpful? I'll add something a little bit more general to that as well, which is for anybody who is considering a career in investment. There's there's a strategy framework, a business model called the Gartner Hype Cycle. And any of you who have not heard of the Gartner Hype Cycle but are interested in working in investing should go away and do some research on that. I'll leave that with you there. But it's very important as an investor to understand sometimes why stocks are over and undervalued, and the Gartner Hype Cycle will explain that, but it'll also explain how sectors like, not ESG now, but sustainable investment get a lot of traction. They go through a period of disillusionment, possibly, in the public perception, but then they return to normal afterwards. So have a look at that. I was going to take a question for this gentleman here, and then there's a gentleman in the middle at the back.
Hi, George Hannon. I left school in 2023, so quite recently. I'm at UBS in the investment bank on their degree apprenticeship programme. I've been very lucky that I've grown my network pretty exponentially over the last year, and I've had this unparalleled opportunity. But I've met a lot of people that didn't come from the traditional backgrounds which you'd expect to be in finance. So your Bachelor of Sciences, people who did economics, maths, finance at university, or people that don't have degrees at all. And so the question I have to those who perhaps receive a lot of CVs and do a lot of the interviewing and recruiting is, when you see a CV come across that doesn't have a degree or doesn't have that typical degree that you would expect in finance, what are your first thoughts, and is that a big deal these days?
Okay, so for the benefit of those, the question from George is, when some people enter careers in investment without a degree, without having done a degree, how do the panellists react to that? Is it a barrier or an opportunity?
And so we do get that. And it really depends on two things. One is, what role are you applying for? Is it very institutionalized role? For example, financial analyst. You need to know your DCF, you need to know your approaches, and there is very good schools which prepare for that. And if it's a very institutionalized role, then we would look for a degree as this. If it is different, if it is very entrepreneurial, it could be business development, it could be IR, it could be entrepreneurship, then your experience, what you've done, and how different you are to others speaks a lot. So we will split, at least in interviews, and it's maybe not as formalized, is that a very set type of skills, which is taught, and very set financial profession established, or it's something new where we need completely alternative thinkers on this. When we talk about, from our side, alternative thinkers, most of this comes out from some extraordinary experience, showing it that you've done something very different in your experience, resilience, or general life skills will be extremely helpful to this role. It's not as easy, but we get people sometimes, they helped with the NASA spaceship, and they went on to some extreme UN missions. So you do get some of this, but for us, it's still not a majority.
I think I broadly agree with what Alan's just said, and I think in my area a degree is still preferred, but I think there's more and more flexibility around that. In terms of the actual degree, in my experience at least, the subject does not matter. I think there are employers who would prefer economics or some degree of in that area, but Tom's already said he did engineering. I read German, so and I think there's still a good degree of flexibility of thought around that for the reasons Alan's suggesting, which is that actually experience and broad range of personalities is more important.
Thank you, George. Happy with that?
Yeah, thanks.
And there's a gentleman at the back who I can't see there. He's standing up now. Yeah.
Charlie, I was at PE Social in 2004. I did a few years in the army and now work on the emerging market debt team at Jefferies. Question for you guys. Investments potentially could be the last race, as in we're watching the last race happening, we're joining because our parents made lots of money in it or whatever. If you were starting anew now or starting a new career, Where would you guys focus on now? Would it be the same industry, or would you go somewhere different? And please don't say AI.
So Charlie's question was, if I may paraphrase it, if we had our time again, given the way the world is changing, would we still go for a career in investment? I'm not even going to try and attempt that one. Let's start with Alan this time. Let's give Alan less thinking time and give Alex more thinking time.
I would have to disappoint you. I would go a bit with AI, but on a different side of it. As technology progresses, we need to understand where do we find our place within the next wave of a dominant technology. It doesn't matter. It could be defense, it could be space technology, it could be climate. Yeah. The underlying tech, which would lie underneath all of it, you can call it AI, you can call it next wave of a calculation engine, machine learning. It doesn't matter what you call it. Has much more complex decision algorithms. But those algorithms require judgment. They can't judge. They can do great decisions. They will be the best analysts. And yes, unfortunately, I'll be unpopular that, but I think a lot of finance basic jobs can be replaced very easily. And we see it now. Which we discussed, we stopped almost hiring just a junior analyst as a job because it doesn't help as much. You need to be much broader. But going back to it, I would go into the data science side of things or into maybe even some of the social science thing to be able to judge. So improve my level of judgment on the work, whatever that's analytical work or other work, which will be done by the machine. So that's what I would go to. The other one that I would definitely go to if I could is to go into space tech. I think there is a lot of stuff happening. It is a new frontier, and if I had to start completely from scratch and forget about anything there's an incredible amount of the space economy, which it's extremely interesting. I was just getting into it by doing a couple of co-investments with the space specialists, so I would probably get into that.
Tom, would you be an investor again?
Yes, I think so. Albeit, I think the point that that finance is potentially the old race, and that you might have more luck in tech. This wave, I can buy into also. The key is not to just look at the jobs that your uncles and aunts do and decide to go into those same jobs. The key is to try and look for the disruption and how roles are changing and aim towards something new, something which is evolving, which will continue to change. Because ultimately, you want to have an edge on your peers, and the rapidly changing areas of finance or tech or whatever they are allow you as a younger person to get educated, to add value, to kind of push your way up through that career ladder. So I think that there are certainly areas of finance which are interesting, but tech is also interesting.
Max, what about you? You seem like a happy investor, so I think you would do it again.
I actually have two slightly different tangents to this question. One is, I, like many people I'm sure in this room, after I left university, particularly at school, didn't really know how I wanted my sort of career to go, had no real specific interest. That's probably why I started out doing a bit of consulting, because you get a bit of a broad coverage. But I did know that I wanted options, and I knew that having good financial fundamentals, seeing how other businesses operated, both good, bad, middling, multi-billions to a few hundred thousands, I wanted to see how they all worked in a variety of different industries. So if you want to go down the entrepreneurial route, you've got some fundamentals and you've got a bit of experience in how these businesses operate. If you do want to then sector specialize and go be a PE, work for a PE firm, work for a fund manager, do investment banking more traditionally, you've got the option to do that.
So the first part of my answer, I guess, is probably yes, purely because I like the grounding that it gave me early doors to pivot into other things. Now, I've stayed in that sector, although in different guises, for sort of 11 years now. I'm reasonably happy doing that. But I wanted to be able to pivot into near enough what sort of took my fancy later on in life, before real life, wife, children, responsibility kind of hit you. The second part to my answer is, it is a tough industry. It's tough competition. It's long hours. It's, to the people that you're working with, it's the the deals that you might work on are like the be-all and end-all of what they are doing. And it is, as I said, it is quite long hours and it is quite demanding. So I definitely think that there is an element to, if you have a passion outside of what your network might be introduced to, possibly what your parents or family members did, also follow that. You will be just as happy in the end run following something you truly, truly are passionate about as you would doing a sort of high-profile kind of career. And I would very much suggest that you keep those two things in mind, particularly if you are in your early career, because on the one side you do get a good grounding doing something in finance, but on the other side you are in that lane. And if you want to be an artist, want to be an actor, all of those other kind of things, absolutely go and pursue it. It's no less a happy path for you, and it's no less a life sort of well lived, if I can kind of say that.
Alex, to finish.
Briefly to add to that, when I was in Shell in 1986, Top Gun came out and I wanted to be a naval aviator, but that career choice didn't work out. So I have ended up where I said, in private wealth management, and I think I don't think I would make a change, and the reason is because the privilege of being a professional investor is that you get to understand many industries, all really the public industries, and that might be technology for a generation, it might be finance that leads the back, it might be the oil sector. All of these industries are really fascinating, and to be a generalist investor gives you an insight into such a broad range, and that continues and evolves over the career path that I've chosen. So hopefully that's helpful.
Thanks, Alex. Charlie, hopefully that answers your question. Now, time is rushing by, and it's important that we spend a good part of this evening networking, so I'll call time on questions there. But if you have got any more, we will be around, and please do ask us later. I hesitate to try and summarise what the panel said, so I'll try and pick one thing that each panel member said that stuck out for me. You'll remember different things. Alex talked about patience. You do need to be patient to be an investor. Investing is different from trading. We didn't really touch on that. But if you're an investor, you do need to be patient. Max talked about many things, including the fact that in some senses it's a numbers game. And if you want a job in this industry, or indeed any industry, twice as many contacts made is twice as many introductions and twice as many interviews and twice as many opportunities. Tom talked about continuing education, furthering yourself, improving yourself, whether that's getting a professional qualification, something like law or accountancy, or the necessary professional qualifications for working in finance, or indeed just broadening your own horizons. Do it, because employers do quite like people who have an aggressive attitude towards learning, particularly if you're working in investment, because a lot of investment is about admitting what you don't know and learning it. And Alan touched at the very end actually on the importance of judgment. You do need to have a heightened sense of judgment when you're an investor. And if you think that's a skill that you've got, then this may very well be the place to do it. So before we sign off, I've got some important thank yous to say. Firstly, these events are ferociously complicated to organise and difficult to pass off without a hitch. But Caroline and her team from the Radley and Society have done it again this evening. So please will you congratulate her and the redoubtable Dan Pullen, who represents the Common Room at these events. Not too many claps, because you've got a couple more thank yous to go yet, so save them. Thanks to Charles Palmer and everyone at FTI Consulting. You've been warm and generous hosts. Again, your support is invaluable in making these events happen, and we are genuinely very grateful to you. Thank you, Charles, and everyone at FTI. you don't get to clap this one. Thank you for coming and for your questions and your engagement. You've made it much easier, I think, for us by virtue of the attention you've given. And finally, and importantly for me as moderator, thank you to our expert panel who have been generous in their time and insights. They and some others will be part of the networking session which comes afterwards. If you've got any more questions, follow up with them, please do. And I will hand over to Caroline, who's going to explain how the networking session will work. Thank you.
Hello, I have to thank Philip, who actually volunteered to do this. So thank you to Philip. He's been a wonderful moderator tonight. And again, thanks to all our panellists. So I'm Caroline Monaghan, and I'm Associate Director of the Radley Society. And I've realised today that RadSoc have been running these events for 8 years now. And I'm delighted to say that this is the most popular event that we've run. It's completely sold out. It was free, but we managed to fill all the spaces. We had a waiting list, so I'm absolutely delighted about that. It's finally really coming to bear, all the effort that we've put in, and the fact that you want to be involved and engaged is really, really important to us. But what's more important than filling the room is getting the right balance within the room, the right mix of people. So I'm also really delighted that over half of you are under 25, which is the people that we really want to help. And then the rest of you are at various ages and stages in your career. So this does create a perfect balance in that it's exactly what we're trying to achieve, because we can foster peer-to-peer networking within the room, but we can also provide valuable career insights and opportunities for those who are starting out. The other really thrilling statistic, and I'm genuinely thrilled, is that over 57% of you in the room are new to one of these events. You've never come before. So we've got our loyals who network from event to event, and that's brilliant. But there are also new people here tonight, and that's great. That really infuses the room with fresh energy. So I'm so pleased about that. So tonight is unadulteratedly and unashamedly about networking and supporting each other. So please do make the effort to introduce yourself to new faces. Just go and talk to people, especially the 21 boys who have travelled up from Radley this evening with the Dons in tow. Please, let's make their journey worthwhile. Boys, introduce yourself, and the rest of you introduce yourselves to the boys. Now, before we dive into the networking, won't be much longer, 3 quick things. Just a bit of a random one, but a plea. If you can offer work experience or mentoring for Radley boys interested in degree apprenticeships, either if you've done one or if you run them in your firm, we'd really like to know. And Mrs. Rhodes, who's going to put her hand up, Karen Rhodes, who's going to put her hand up at the back, please go and talk to her. So that's degree apprenticeships, mentoring or work experience. We really need that now. We've got a lot of boys interested in degree apprenticeships. Georgia has already helped us a great deal, so please do step forward. Make sure you join Radley Connect. I say it every single time, but 57% of you haven't heard it before, so I'm going to say it again. That's our online networking platform. Works alongside LinkedIn, and it's a friendlier platform. You use both hand in hand. They're both equally important, so please do join. There are cards on the front desk if you want them. And follow us on Instagram. We really show the vibrancy of the Radley community and on @Radley Society, because that connects you with the school, the history of the school, but also the careers that old Radleyans are doing. We regularly do career interviews, so you can go there and see them. Right, now, the fun bit, the group networking. So you've all been given a number on arrival, which corresponds to your networking location. So you'll notice there's a 4 up there, there's a 5 at the back, and then rooms 1, 2, and 3 are down here on the left. So these guys are all going to go to those rooms straight after I finish speaking, and I would like you to go to your location, please, straight after I finish speaking. And I'm going to move the speakers around. You will stay put. I'm just going to move the speakers because it's a lot easier. Just every 8 minutes, and we're going to do that 5 rotations, and then it's just over to general networking between you. So please move straight after I finish speaking and enjoy your networking. Thank you very much.